Hello everyone, welcome to the weekly commodities audiocast with me, your host and guide Ravindra Rao from Kotak Securities Commodities Research Desk. Once again, inflation was the name of the game. Commodities ended the volatile week with losses as US inflation print and FOMC meeting minutes largely cemented expectations of another seizable interest rate hike in the November meeting. Widely watched CME Fed Watch tool now assigns a 97% probability to a 75 basis point rate hike in next FOMC meeting. US dollar index was steady to positive, continuing its second weekly rise when it fell close to 110. Headline US CPI rose 0.4% in September and core CPI increased 0.6%. Although year-on-year reading showed some easing, core CPI, which excludes food and energy, rose to 6.6% year-on-year from 6.3% year-on-year in August. Higher than expected US CPI print signaled that inflation is not yet under control and may prompt the Fed to continue with its aggressive policy stance to bring inflation near to its 2% target. US dollar index closed at the highest for 2 decades at 113.29, whereas the US 10-year Treasury yields closed above the psychological 4% mark, a 14-year high. Although the US dollar index recovered from lower levels, it is yet to break above the recent highs set near 114.78. Till that holds, it can be vulnerable to corrective dips as inflation data from Eurozone and UK might have a bearing on the US dollars move in the week. Coming to precious metals, COMEX gold witnessed worst weekly close since August amid a steady US dollar and rising treasury yields. Both COMEX and MCX gold closed more than 3% lower, whereas US dollar gained by 0.48% and US 10-year treasury yield rose close to 4% on weekly basis. Gold witnessed wild moves after the US CPI print, which came in more than expected, supporting the Fed's case for aggressive rate hikes. Although US CPI print triggered a strong counter reaction from commodities on Thursday, prices fell again on Friday, aligning it with the higher CPI print. Worsening global growth outlook has also not been able to boost the safe haven buying in the precious metals. The International Monetary Fund has projected the global economy to grow by 3.2% in 2022 and 2.7% in 2023, with a downward zero point 0.2 percentage point revision for 2023 from July forecast, according to the latest World Economic Outlook report. Similar trend was seen in COMEX silver, which witnessed the worst weekly closing since August. COMEX silver fell close to 11%, whereas MCX silver witnessed a slight over 9% fall on weekly closing basis. Silver, that had seen a good recovery from the lower levels set couple of weeks back, got hit due to weaker gold and steady to weak industrial metals amid stronger dollar. The bulls have failed to keep the price of COMEX gold above $1,700 per ounce, as disappointing data pointers from the US is indicative of the fact that the Fed will be committed with their aggressive stance of cooling down inflation. In the week ahead, more CPI data around the globe, especially UK and Eurozone, might keep markets volatile. China will be releasing GDP, retail sales, and industrial production data on Tuesday, which will be watched by traders to take a cue on the Chinese economy. In the US, housing data and couple of speeches by FOMC members might be keenly watched by the traders to take a cue on Fed's further stance. All this will have a bearing on the US dollar and the treasury yields, thereby impacting the bullion prices. Technically, COMEX gold is still above the piercing line candlestick pattern low of $16.22 per ounce. Until that holds, a recovery can't be ruled out. However, if the bears succeed in taking it below 1622 dollar per ounce, the fall might extend till the 252 a week MA support near $15.98. On the MCX, near month gold contract is close to the 252-day moving average support of 50,140. A closing below that might take the price deeper towards 49,800 to 49,600. Till the set support holds, an immediate range between 50,150 to 50,800 is possible for the week. In case of COMEX silver, $17.98 per ounce would act as a good support. Below that, the price might fall till $17.40 per ounce, which was the low hit on 1st of September 2022. For MCX silver, a near month contract support is pegged near 54,200. Until that holds, the immediate trading range for the week would be 54,200 to 56,700. Coming to energies, WTI and Brent both traded lower for 4 sessions out of 5 this week, as rising fears of a recession and demand outlook downgrades by OPEC and IEA outweighed supply tightness fears escalated by latest OPEC output cut. OPEC revised down its estimate of global oil demand growth for 2022 by 460,000 barrels per day in its closely watched monthly oil report, citing China's COVID lockdowns, economic headwinds in developed economies, and inflationary pressures everywhere. For similar reasons, IEA reduced its oil demand growth forecast to 1.9 million barrels per day in 2022 and to 1.7 million barrels per day in 2023, down by 60,000 barrels per day and 470,000 barrels per day respectively from its last month's report. The global outlook remains bleak and inflation at higher levels. Further downgrades cannot be ruled out. Having said that, demand concerns might keep crude prices on the downward trajectory for the week. Technically, WTI crude remains close to the support near $1.85 per barrel. If that is taken out on a closing basis, the bears might once again pull the price towards $81 per barrel. If the said support holds, we can expect a range move between $85 to $90 per barrel. On the MCX, crude near month contract has closed near 52-day MA support of 7,063. A break and close below the same might give the bears the edge to take it close to 6750, the next best support. Finally, in case of base metals, on the LME, except copper traded lower on serious demand concerns as IMF projects three largest economies, the US, China, and the Euro, will continue to stall. IMF expects Chinese economy to grow by 3.2% in 2022, lowest in 4 decades, owing to COVID-19 outbreaks and worsening property crisis. Copper managed to close marginally higher, supported by lower than expected inventory additions in China during the Golden Week holiday. On the other hand, LME aluminium, which had jumped to $2,395 per ton, as the US reportedly was considering to complete a ban on Russian aluminium, erased gains on sharp increase in stocks at both LME and Shanghai warehouses. In the week, developments at China's 20th National Congress that starts October 16th will be closely watched for clues on government plans to implement its zero COVID-19 policy. Also, release of crucial economic indicators from China, notably GDP for September quarter, will be keenly awaited. US existing home sales and Philly Fed manufacturing index may not have an influence on the rate decision for November, though consistent weakness in home sales may allow inflation to fall quickly through 2023. Technically, copper bulls have once again failed in keeping the prices above 658-660 zone on the MCX. On the flip side, support is pegged near 640. Until 640 holds, the bulls still stand a chance to keep the price higher. However, if the support of 640 breaks on closing, the bears might once again pull the price close to the next support near 629. To conclude, commodities will continue to take cues from the American currency as well as the US Treasury yields. Focus for the week would be on UK and Euro area inflation print. Traders will also keep a close watch on plethora of Chinese data like GDP, retail sales, and industrial production, along with the development at China's National Congress. That's all in this edition of Commodities Weekly Audiocast. Good luck and trade safe.